What is up, you guys? I'm sure every single YouTuber and their mother is posting a video today because as of right now, the S&P 500 just closed down 3.5%, and the NASDAQ closed a whopping 5%, was actually down almost 6% at one time, and the coveted Apple is down over 8%, and Tesla closed down over 9%. Now, I'm not making this video to get views or to hop on a hype train or anything like that. Like, I didn't even plan on making a video today, but after this, I'm getting a lot of people asking me, like, what are my thoughts? And I kind of just figured I'd sit down for about 10 minutes and talk about them. I made a video yesterday saying Tesla just fell, and I kind of talked about when I saw Tesla probably going to about $400 a share and then potentially $350 a share. And I got a ton of hate, like a ton of hate. A lot of people who are, I guess, butthurt at the fact that they bought Tesla at the top. And it's not like I want people to lose money. I don't want people to end up buying at the top. I just kind of want to educate people on, like, you know, if you're trading, what is your risk tolerance? What, is your potential reward for the risk that you're taking? And I don't think it's very high right now. After the sell-off, it is. We'll kind of talk about that in a minute. But as of yesterday, your risk versus reward was not that high because we're just astronomically overpriced right now. Let's just kind of go over things. Apple down 8% as well. Tesla down about to $401.50, pretty perfectly where I called it. Let's talk about why I called it, right? Yesterday, when I posted that video, Tesla was sitting right here at about, actually this is Apple. Let's take a look at Tesla. Tesla was sitting right here, and you can see I have all of my price levels panned out right here. Yesterday, Tesla was sitting originally up at like $479, and then it closed yesterday at $440. Guys, you have to realize when a stock is hitting bubble territory, when a stock is up over 1,000% in 1 year, and big money is not going to continue to buy this, it's just retail pushing the price up, eventually we're going to get a pullback. I want to start this video by essentially saying that if you're a long-term investor, you have nothing to worry about at all in the slightest. Both Tesla and both Apple are phenomenal companies. You should not be worried or upset if you're a long-term investor. And if you are upset, if you are unable to look at, your negative day today down about 8, 9, 10, 11%, then you're either have zero risk tolerance and you shouldn't have that much money in the stock market, or you just have too much money in the stock market and you're kind of worried about losing that money. Any money that's going to touch the stock market, whether it's a long-term investment or it is money that you plan to trade with, has to be assumed as dead money, money that you're never going to see again. If not, you're going to get very emotional about it. But I want to talk about specifically why I called out those price targets yesterday and what do those price targets actually mean. We kept having this big push up, and we topped out on Tesla at $538. We had a big pullback, a consolidation period where we held $482, and I said in my private stock market academy, if we don't hold $482, we're going to fall down to $445. And exactly what happened. We fell down to $445. We held, and then I said yesterday in the private stock market academy and online here on this YouTube, go back, watch it yesterday, guys. I'm sharing this information so that you can learn more, not to be like, I told you so, guys. I'm doing this so you guys can understand where I came from and why I said this. And to the T, we fell, and now I'm assuming tomorrow we're going to fall down to $385 before potentially finding a bottom. Now, please remember, too, that it is a 4-day weekend. We will be closed Monday for Labor Day. But, I definitely think we could bounce on Tesla at $385, but I think that the best place for it to end up buying would be $348.58. That seems to be the sweet spot. Now, if we take a look at Apple, we can see sort of the same thing going on here. We had this bit of a peaking out here at $138 a share. We had a bit of a support here at this EMA at about $131. Then you could see we consolidated, fell to the 50-day SMA, which is about $126. I expected us to break through that and fall to this 100-day SMA, which is exactly what happened. Now, I get a lot of people today asking me, should I be buying Apple stock? Guys, this is going to be to no surprise. If you're a long-term investor, doesn't matter, right? I finally bought some Apple stock today after a very long time of not purchasing any. It's a very, 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 very small position in the $0 to $50,000 challenge that we're doing. But overall, if you're buying for the long term, it doesn't matter. Could we bounce here tomorrow? Yes, we're at a very strong support. Do I think we will bounce tomorrow? No. I think that we're going to end up falling down to about $110 on Apple, especially if you look here on the 4-hour chart. That would be your 200-day SMA. And then if we take a look at the daily chart, that would be right around your 50-day SMA. If we look at the daily chart for Apple, it actually looks way worse because we have closed below this EMA, which is not a good sign. We are really, really bearish on this RSI. We have a ton of selling pressure coming to the downside. MACD crossed, moving to the downside. I would expect Apple to be at $110 probably by next Wednesday or Thursday because the market's not going to be open Monday. We could get a bounce. We could get a hold. We could get a bit of a bull trap, which I talked about that yesterday. But overall, I mean, look at the weekly chart, guys. For those of you who don't know, the weekly chart is one of the strongest charts that we have. It is one of the longest charts that we have because each one of these bars equals 1 week. It's very hard to get overbought on the RSI. And it's not like one indicator technically is going to tell you if you should or shouldn't buy something or the trend. Of course, that's not how this works, right? This is not a truth-telling automatic charting platform where it's going to tell you exactly where things go, but it will give you a probability. And the probability of Apple falling back to this EMA at minimum on the weekly chart is pretty high. So over the next week or two, I would expect at least another 10% pullback down to this EMA as well. If we take a look at Tesla, Tesla's the same thing, still overbought, making a bit of a bearish divergence. I'd expect Tesla at $350. I still stand by my price targets. Now, am I buying these? Am I selling these? Am I getting puts? No, I'm not touching any of this. I'm just buying some Apple as it goes down towards my long-term portfolio, but I'm not trading any of this. It's just too volatile to trade, right? And for a lot of people, they're like, well, you're a trader. You should love volatility. Yeah, but not this type of volatility. This is just stupid. From a trading standpoint, I play from what is my risk versus reward. In this standpoint, there's not a high risk versus reward, right? I'll give you a good example right now of a trade I'm in. SPCE. It's a pretty good risk versus reward. I entered this position here at $17.35. The next resistance, or where I would sell, is here at $20, which is a 10% return. Then potentially a $21 move, which would be a 20% return. And currently right now I'm down 5%. So risking potential 7% to make 20%, that is worth it. In the case of Apple as a trade, I feel like some people really don't understand what that means. Like, I had people freaking out yesterday, but I'm not telling you you're dumb if you're buying Apple. That's not happening. But in this case here, if you're trading and you were to get into Apple, back up to highs from here is 14%. But from here down to the next big support is a 10% loss. Do you want to risk $10 to make $14? That's not good. That's not good risk versus reward. So if you guys want to learn more about trading, if you want to learn more about risk versus reward, if you want to learn more about reading charts and technical analysis, I will put my private Discord down below. I give 7 days away completely for free because I want you guys to make sure that it's, number one, something that you want to do, and number two, to make sure that, when you join our academy, you're literally a part of a family and a community. So I want to make sure that you're not just somebody who's going to hop in, want to make fast cash. That's not how it is. So we give 7 days away for free, give 55 hours of courses and lectures. We go live every single morning at 9 a.m. to 10 a.m. I go over what I'm trading and why I'm trading it, which is the most important thing. And yeah, guys, overall, if you're a long-term investor, don't sweat this. This is a buying opportunity. This happens. Actually, if you're a long-term investor, you want to see this. You want to see a pullback. You want to see a consolidation period. That's how cycles move, right? This is called a market cycle. Cycles happen all the time. Look at Tesla, back before. Look at this cycle. Big push up, big pull back, followed by another big push up, followed by a pullback, followed by a big push up, followed by another pullback. This happens with everything, guys. If you're a long-term investor, you want to see this. You don't want to just see a big push up, then a bubble occur. So comment down below. Let me know what you guys think. Let me know if you're buying Apple. Let me know if you're getting puts. I love hearing your feedback. I love hearing what you guys are doing. Once again, I will say it one final time. If you're a long-term investor, you're fine. If you're a trader, however, make sure you use proper risk management. Don't go blowing up your portfolio over one trade or anything. and make sure you stay responsible. All right, guys, enjoy your day. Until next time, I'll see you.